So those of you who haven't met me before, I work on the email information advice line predominantly. I have a bit of a specialism in welfare benefits, general care inquiries, and I do have lived experience of being a carer and working full time as well. As the session goes on, if you want to pop any thoughts or any questions into the chat box, please feel free to do so. I'll try and answer them at the end of the session, or if you want to ask a question, you can just keep it until the end. If time is getting away from us and there's a question in there I don't get to, I will make sure that I answer it after the session there. And it may be, of course, that you have some experience or thoughts or knowledge that you would like to share, and that's the whole point. You're very welcome to do that as well. And we've got some time right at the end there. Okay, so what are we going to be talking about today? So today's topic is all about pension credit. Okay, very topical given the changes that have been made to the eligibility to the winter fuel payment, but that is not all that pension credit is about, and that's what we're going to find out about today. So let's start with, so you're going to get a copy of these slides sent out afterwards, I understand, but most of this information is on our website, and there are links there in the slides, and I'm sure that there'll be links shared with you as well throughout the course of the session. So pension credit is a benefit. It's designed to provide extra income to those over the state pension age. And so that's the clue to who can qualify for this benefit. As we know, the state pension age is on a sliding scale of eligibility. So it depends on when you were born, when you're able to make a claim. If you are eligible to make a claim, it is designed to provide that extra income, and it sets something called a minimum income level. So benefits, the world of benefits, it loves the jargon. So the minimum income level is something that you will hear a lot, and that is the level that is set that a household needs to live on based on their circumstances. So for a single person, it's £218.15 a week currently, and for couples, it's £332.95 a week. It's means tested, so that means things like state pension amounts, occupational private pensions, certain benefits, assumed income from investments or savings and earnings to determine eligibility there. A quick note about the means test. Remember, I've just said we need to be very mindful of that minimum income level. So that is the minimum amount of money the government says a household needs to live on. It's calculated, and that is the amount that is set. We're going to look in a moment about how it's calculated and how it's important that actually you get everything you can into that minimum income level amount. A second part of the calculation is carried out, and so what that does is it gathers together all of the income that you have coming in. So any pensions, any income from savings, any rental income. And then the calculation takes one from the other. So if the income you have coming in, so your means to support yourself, is less than the income minimum guarantee, so the amount that the government says you need to live on, then if you're over state pension age, you'll be topped up with pension credit. It sounds more complicated than it is, but don't worry, there are little tricks to help you work out whether you're going to be eligible or not. Pension credit is actually divided into two parts. We've got the guaranteed pension credit, which is the one that you hear commonly bandied about today. And you have another part called savings credit guarantee. Now, savings credit guarantee, you don't hear about it so much because you can no longer make a new claim for savings credit guaranteed, unless, there's an unless, but you might already be receiving it. But if you are a woman born before 6th of April 1950 or a man born before 6th of April 1945, then you can still, if you make a claim for pension credit, also make a claim for savings credit, but not for those of us who are younger than that, okay? So it is still paid. Savings credit is money that is paid as a reward to you for saving towards your retirement. Okay, so one of the big pushes for pension credit. So if we take aside winter fuel payment for a moment. So pension credit, guaranteed pension credit. So that part that guarantees the minimum income. If somebody has an entitlement of even 1 pence, a little tiny entitlement of 1 pence, it is still worth claiming because it is what's known as a passporting benefit. Okay, so in the world of benefits, we've got different benefits that do different things. We've got a little suite of benefits known as passporting benefits, and guaranteed pension credit sits in there. So as long as you have some entitlement, so it could be as little as 1 pence, okay, you could also get maximum support with your rent and council tax. You could get, if you're a homeowner, help with service charges or ground rent, free NHS dental treatment and site tests, winter fuel payment, okay, which could be £200 to £300. If you're up in Scotland, I've done a little bit of research around this, and it was expected to be something called a pension age winter heating payment, which had sort of different but similar eligibility. That looks like that might now be on pause, so you might still be under the remit of winter fuel payments. Wales and Northern Ireland, they're following the UK government stance, and you are going with winter fuel payments as well, to the best of my knowledge. I'm going to quickly dive to winter fuel payments just to remind you what they are. So if you lived in England and Wales for at least 1 day during the week of the 16th to the 22nd of September, so that is actually this week, okay? So if you're in the UK broadly, but England and Wales, you're definitely following the winter fuel payment eligibility scheme. And if you were born before the 23rd of September 1958, so this means that you are falling into state retirement pension age, and you are getting one of the following benefits. So guaranteed pension credit, universal credit, the other income-based related benefits, child tax credit, working tax credit. Now that's a bit of a misnomer, if I'm going to be perfectly honest. If you are of pension age, you are, unless there are, it's unlikely, I should say, it's unlikely if you are of pension age, you are also going to be getting income-related employment support allowance, income-based job seekers allowance as part of a claim. It was technically possible to have joint claims within a mixed couple relationship, but that is no longer the case. Okay, so very limited circumstances. So for us, we're going to focus on guaranteed pension credit. You'll have noticed that the eligibility for disability benefits has been removed from there. Okay, so you have to have been born before the 23rd of September 1958. You have to live in the UK during this week. And if you are eligible at this point in time, I'm going to keep it simple. I'm going to say you are on an automatic payment list, and the money will start to be paid out to you towards the end of the year, the beginning of this year. So from about mid-October onwards, all the way up until March next year, the winter fuel payments are made. If you are currently on the list, and I'm going to come back to why that is important. Okay, so I'm going to jump back to that 1 pence of pension credit. Also entitles you to the warm home discount, help with cost of glasses, help with travel costs or NHS treatment, cold weather payments when the temperature is degrees Celsius or below, money off electricity bills through the warm home discount scheme, and free TV licenses if you're 75 or over. So that's why it's an underutilized benefit. People don't realize how much it can actually link you to saving. Okay. So how do we become eligible for pension credit? So the first bit, you have to be over state pension age. Your income needs to be less than the amount the government says you need to live on. If you do have savings, these are taken into account. So the first £10,000 of any savings is completely disregarded for pension credit. So that means it's not counted in a calculation. DWP, they're not interested, okay? Any savings above this amount are taken into account using a method called tariff income. So tariff income, it's a little calculation. It generally assumes that for every £500 of savings over £10,000, you get a deduction from the amount of pension credit that you would be entitled to. So £1 per week is added to your assessed income, meaning you'll receive £1 less. So the higher savings will increase how much income you have, reducing the amount of pension credit. But if you are a person of an older age, so if you were born before those dates I said earlier on, I'm sorry, I can't remember what they are. Was it 1950, 1945? Then the more savings you have, the more savings credit that you could have. Okay, so to claim pension credit, you must live in the UK, Channel Islands, Isle of Man. If you live outside of these areas, you won't be eligible to claim. There are the immigration requirements on pension credit there. So you must be a British citizen, EU citizen with settled status, or have the right to reside in the UK. And you have to make an application for it. Pension credit is not automatically granted based on age alone. Okay, so you have to make a claim. Which brings me to who can make a claim. So if you meet all of that eligibility yourself and you have a partner who has not yet reached state pension age, then you are known within the benefit system as a mixed age couple. So that is where one person is over state pension age and the other person is under. Now, a mixed age couple cannot make a new claim for pension credit until both partners have reached state pension age. Okay. Generally, you would make a claim for universal credit instead. Okay, so you both, if you're in a couple claim and you're a mixed age couple, you generally will be claiming universal credit instead, unless you have been claiming together before 2019. And that's what I was saying about you may have one partner who's getting pension credit, one person who's getting employment and support allowance, but only if that claim's been running for about 5 years. You cannot, you just don't see that situation anymore for new claims. To try and keep it simple, okay, the government has created something called a pension credit checker. Okay, and this is designed to give you a little bit of an idea about if you would be eligible to claim pension credit before you actually make the application. Saves you time. I know time's very precious to us all. However, not everybody's situation falls nicely into this pension credit checker. Okay, so for example, if you're deferring your state pension, if you own more than one property, maybe you've got a rental portfolio, you're self-employed, you have housing costs, so such as service charges or crown tenant rent, which are neither mortgage payments nor rent covered by housing benefit. Has my screen gone off there? No, it hasn't. Okay. If you get housing benefit because you're part of that state pension age couple already making a claim, or if you're a mixed age couple, okay? So if you can't use the calculator, what you can do is you can call the pension credit helpline instead. There's a different number to claim if you've deferred your state pension, but I'll put some claiming details later on in this deck, okay? So not everybody's going to be using the checker, but it's useful for those of you who are going to be able to do it. But like any benefit calculator, like any checker, and those of you who have been on any of my sessions beforehand, you know that you're going to have to gather together a lot of information, and the results are only going to be as accurate as what you put in. And this is true for this one as well. So the first thing you need to do is open up the calculator. It's going to ask you to enter your personal information, so your age, so that's you and your partner's age. It's going to get you to confirm that you live in the UK. Then it's going to ask you to pop in all of those financial details, so your income, so pensions, benefit, any income from employment there. Now, if you are in a caring role, it is also just worth considering if you would be eligible to claim pension credit based on having an underlying entitlement to carer's allowance. Now, those of you who are familiar with the concept that once you start to claim your state pension, you're not able to continue to be paid carer's allowance if the amount of state pension you get is more than the amount of carer's allowance, will have received that letter saying you have an underlying entitlement to carer's allowance. Or it could be that actually you have an underlying entitlement to carer's allowance, and we're going to look in a minute to see what that actually involves, but you haven't made a claim for it yet. And on the pension credit, you are able to just make a nod to the fact that you're a carer, and you can do this on the calculator. And it's the question where the pension credit checker asks you, does anyone get paid carer's allowance or carer support payment if you're in Scotland for looking after you? Simple yes or no question. Have you applied for carer's allowance or carer support payment and been told that you have an underlying entitlement? So that means you would be eligible for it, but you can't be paid it because of the underlying entitlement benefit rules. Now, if this applies to you and you tick this box, remember initially we're just doing a check to see if you're going to be eligible for pension credit, then this can give you an idea of what eligibility you might have. So don't forget to include that eligibility check in there. Okay. The checker will provide an estimate of whether you are eligible for pension credit and any potential amounts you could receive. And if it shows that you are eligible, you can then proceed to make your applications, which can be done online, by phone, or by post using the information provided. Again, I'm going to show you how we do that. I think it's really important that we actually just consider why eligibility to carer's allowance can be a huge factor. So we're all here because we are experiencing, or we have some experience of being in a caring role to provide support to our families, friends, and loved ones, for example. So I'm going to take us back a little bit in this journey and just consider, what is carer's allowance? Now, carer's allowance is the benefit that the eligibility criteria are used by the Department of Work and Pensions, and to a certain extent the UK government, to determine someone's eligibility to be a carer, okay, to be recognised in a carer's role. So within the role of welfare benefits. So carer's allowance is that main benefit that's paid at a weekly rate, currently just under £82. There's no capital or savings limit. There's really strict eligibility criteria. Not everyone in a caring role will have eligibility to be paid carer's allowance. But if we have that underlying entitlement, it can lead to premiums and additions being paid and added to other benefits. The eligibility for carer's allowance, with the exception of the earnings limit, is what is generally used by the DWP to acknowledge someone's in a caring role. As you're probably aware, there is no sliding scale of entitlement. You are either entitled or you are not. So if you are being paid carer's allowance, the best way to avoid any sort of overpayment is to understand the rules of entitlement. Okay. So who can claim and can be paid? Okay, so just a really quick reminder. You have to look after someone who gets qualifying disability benefits. So our old friends there, personal independence payment, disability living allowance, attendance allowance, for example. You have to look after that person, provide care and support for 35 hours a week. You've got to be aged over 16 or over. You can't be in full-time education. If you are working, you can't earn more than £151 a week. Again, you've got to satisfy residence and presence conditions. You can't be in receipt of an overlapping benefit. Overlapping benefits are best described as two benefits somebody's entitled to, but they can't be paid because they overlap. So for example, you're not expected to look for work when you're under state retirement age because you are caring for someone. You become state retirement age, so now you're not expected to look for work because you are retired. So those two benefits, they do the same thing. The benefit system isn't very good at putting people into two categories. It works much better if it can slot you nicely into one category. That being said, generally carers allowance cannot be paid to people of state retirement age unless the amount of carers allowance they get, so the £81.92, I think it is less than the amount of state pension that somebody gets. Okay, so if someone gets a really small state pension and the carers allowance is larger than the amount of state pension, then you can still be paid both. But for everyone else, underlying entitlement brings you into different eligibility there. So the means test for pension credit. So that minimum income amount, the government says your household needs to survive on. So it's a theoretical test to begin with, but it's assimilating information about who lives in that household. So pension credit eligibility, that very first slide, if you're a single person, it's £218.15, £332.95 if you're a couple. Okay, unless you can layer up the amount that you're eligible for by adding in different premiums and additions. So the first one is that carers addition that I keep talking about, that underlying entitlement to carers allowance. You can't be paid carers allowance, you're eligible for it, but you can use it to tweak the amount of pension credit the government says your household needs to live on. So this could increase that minimum income level by an extra £45.60 a week. Okay, so it could be that you are being paid carers allowance, you're being paid carers support payment, you've claimed carers allowance but you're not being paid it, and if in a couple both claimants have claimed or are getting carers allowance, they can both get this extra amount. So two carers additions could be included. Very conscious this probably sounds a bit hypothetical, so I'm going to introduce you to Mrs. Bell. Okay, let me get Mrs. Bell up here. There we are. So Mrs. Bell lives alone and she gets state pension of £222.59 a week. No other income. Mrs. Bell thinks that she'll not qualify for pension credit as her income, her pension income, is higher than that minimum income level guarantee of £218.15. However, Mrs. Bell claims carers allowance for looking after her sister. She's been told that because her pension, £222.59, is higher than the physical cash amount of carers allowance, just under £82 a week, she cannot be paid carers allowance. But she continues to have an underlying entitlement to it. So this means, with our newfound knowledge, that we can add on £45.60 a week to that minimum income level. So £225.59 plus £45.60 a week now brings that new minimum income level for Mrs. Bell of £263.75. Okay, so not only is she now better off because she's going to get £41.16 a week guaranteed pension credit, she's also going to be passported. She's got more than a £1 award, maximum help with rent and council tax if she's a homeowner, help with ground rent, free dentals, free sight tests. Now she's going to become eligible for winter fuel payments. She's also going to become eligible for the warm home discount potentially, help with glasses, help with travel costs, cold weather payments, money off electricity bills, and a free TV licence if they're over 75. Okay, all from making an application for an underlying entitlement. So she couldn't be paid it, but actually we've used that information to stack up her entitlement. There are a range of other ways that you can increase your minimum income level. It could be that if somebody lives on their own, or if you have two people who have a disability benefit and payment within the same benefit couple, that severe disability additions could be included into that minimum income level amount. So it could, nobody can be getting carers allowance for them or have the carers element of universal credit for looking after someone. They generally have to live alone in order to have this included in a pension credit claim. But it is very commonly seen that you have two people who have long-term disabilities and health conditions themselves, who are providing care and support to each other. And so therefore they could, if they were both of state pension age, they could both apply to have the carers addition put in, and they could both apply to have the severe disability addition added as well. So that would really increase the amount of minimum income level that they could get. If someone's of pension age and responsible for a child or young person who normally lives with them, and if they are currently not already receiving tax credits, so either child tax credit or working tax credit, then they can have a child addition or a disabled child addition added into their minimum income level amount as well. This area is really complex, not really part of today's session. It's not that widely seen, but it is worth knowing about if you are already of state retirement age. Okay. This is mainly for your information for after today's session, but very much just that reminder about how to make a claim for carers allowance. Now, you are making claim for carers allowance purely to get a letter to say you can't be paid it, but you're going to have an underlying entitlement to it. Okay. So you can claim online, you can call the carers allowance unit, you can request a paper application if you make the telephone call, you can then print off a form if you want to, you can pop it in the post. You need to have all the information that you would generally need for any sort of benefit claim, so national insurance numbers, bank account details. In this case, you also need to have which qualifying benefit the person you are caring for, so details of that person, and information of any earnings if you are in a position where you have earnings as well. Be backdated for up to 3 months if you were eligible during the backdating period. And you have to make a request for backdating for carers allowance when you first apply. And this is something tactically that's worth knowing about. So I'm going to come back to this. Carers allowance can be backdated. You don't have to give a reason why you're making a late request, but you do have to show that you were providing care and support for 35 hours. You know, you do have to show that you had earnings under £151 a week. You know, you do need to show you weren't in full-time education. This links onto claiming pension credit. So after you've done the checker eligibility, and you've had a little think and you've had a look and you thought, okay, so potentially I could be eligible for pension credit based on the information I've put in. Potentially I could be eligible for pension credit if I had an underlying entitlement award from carers allowance. So what I'm going to do is I'm going to make an application for pension credit. Okay. It's not that difficult to claim for, but with all benefits, it takes time to gather that information there. Okay, so you can claim online, you can claim by requesting a paper form, by phoning the pension credit helpline, you can request paper applications. Again, you're going to need date of birth, national insurance numbers, bank account details, all that information around income, savings and any investments, and details of any benefits that are currently being received. And again, with backdating, pension credit can be backdated by up to 3 months if someone's eligible. but you have to make that request during the application process. I'm just going to quickly say at this point, carer's allowance is paid from the carer's allowance unit. Pension credit is paid through the pension service, 2 different departments, okay? The winter fuel payment is paid from another department. Now, I think it's fair to say that all of these departments are not great at talking to each other. So it's always prudent just to make sure that you get in touch with the right people when you are talking about the right benefit. Now, pension credit claims take around 6 to 8 weeks to process. Currently, could be a little bit longer, might be a little bit less. There's a huge backlog with carers allowance. They're taking a little bit longer. I've seen anywhere between 8 to 16 weeks, maybe even a little bit longer than that, depending on if all the correct information is provided. And if you want to request that backdating, it doesn't matter what benefit you are requesting it for, always make that application at the point of making the claim. So when do you want the claim to start from? Backdate it to the date you want it to start from. And when you get towards the end of the claim, there will always be a box, or there will always be a question that says, is there any other information you would like to provide? Or is there any other information you think we should know? In that section, always reiterate that you are making a request for backdating and the date you want the claim to start from. Especially prudent, okay, when we're talking about the winter fuel payment. Now, when I mentioned the winter fuel payment, I know it was very briefly, I said that if you were eligible for a winter fuel payment, so for example, you were receiving pension credit during that qualifying week, which is this week, coincidentally, and you were receiving your state pension, then it was going to be paid automatically to you because you were on the list. Okay. Now, if you're currently not on the list because you haven't made a claim for pension credit yet, or you haven't found out if you're eligible for pension credit yet, we can start to get a little bit tactical. Okay, so it isn't too late. Even though the qualifying week is this week for pension credit, we've just learned that carers allowance and pension credit can be backdated by 3 months. So this now gives us until the 21st of December 2024 to become in receipt of pension credit, guaranteed pension credit. So when you do your pension credit checker, if the only way you are going to be eligible for pension credit is if you have that carers addition added in, then you need to make a claim for carers allowance and a claim for pension credit. If your income is already low and you are eligible without making a claim for the carers addition, then you need to make a claim for pension credit. Okay, so we've got till the 21st of December 2024 to make a claim, and that will request backdating. The maximum 3 months will take you till the 20th of September, which falls in that qualifying week. The advisor part of me says, please don't leave it that late. You know, it's the winter, it's that festive time of year. Benefit claims are taking quite a long time to be processed. So even if you make the claim in December, remember you had to have been eligible for your state pension prior to the 16th to the 22nd of September. Okay. So make sure you indicate when you're making any application for benefits that you were putting backdated a request in. Pension credit will only backdate if requested, and work out your backdating request very carefully. Okay. Pension credit is generally paid on a Monday. Sometimes it's paid a little bit differently, but it's generally paid at the beginning of a week. If you are going to be making a claim based solely on having a carers addition added into that pension credit, Remember, for your underlying entitlement or carer's allowance works slightly differently. Their weeks start on a Sunday and they end on a Saturday. So we don't want to have that mismatch when it comes to the dates that the claims start. Now, if you do become eligible for pension credit after this week, okay, and you are of state pension age, and you put a request in for pension credit, and it's backdated, okay, you were not on the list to receive your winter fuel payment this week because you weren't eligible this week. So then you have to make a claim for your winter fuel payment, okay? You're eligible for it now. It's just you're not going to automatically be paid it because you weren't on the list of payment this week. Very easy to make a claim. You've got until the end of March to do it, okay? So you've got until the end of March to make a claim for the winter fuel payment, okay? And then once you are in the system, as long as your circumstances don't change, and as long as the eligibility criteria doesn't change again, next year you'll be paid automatically because you'll be on the list. Okay. So there's some questions coming in, but I will get to them. Okay. So if you make a claim for pension credit and that claim is unsuccessful, okay, the process is the same as it is for all other welfare benefits. So it might be that actually you're interested in making a claim for pension credit. The first thing you always need to do is, if the decision comes back saying you're not entitled, it's about reviewing that decision letter. You know, did you make a mistake when you were asking for backdating? You know, have you asked the claim to start at the wrong time, for example? Understand the reason for the denial. Request that mandatory reconsideration. So if you believe the decision was incorrect, you can request the mandatory reconsideration, and that just means asking somebody else to have a look at the claim, and that has to be done within 1 calendar month of the decision. This means you can put in any additional evidence or correct any errors in your application there. It's always advisable to seek advice, you know, so it might be you want to get in touch with the helpline. You can email in, and myself or one of my colleagues will be able to support you. There are other organisations that maybe you've got a relationship with already, and they might be able to help and support you there. When you are going through a mandatory reconsideration stage, it's really important that you just double check the eligibility criteria for it, you know, make sure that you are eligible for it. And if your mandatory reconsideration comes back unsuccessful, then we would be moving on to moving towards a welfare benefits tribunal hearing there. And that will be submitted again within 1 month of the reconsideration amount. Okay. Typically as well, carer's allowance is taking longer than pension credit. So it is highly possible that you make your claim for pension credit, but you don't have your underlying entitlement letter in place yet because the two are mismatched. If that did happen, I would recommend that you ask for a mandatory reconsideration of the pension credit decision and include the evidence of your carer's allowance claim, and explain, if you've got a copy of that calculation from the government pension credit calculator that shows your entitlement to it, I would include a copy of that as well, and ask for a stay or a pause on the mandatory reconsideration decision until the carer's allowance decision was made. It does get a little bit technical. That is something that, if you find someone to support you with casework, would be able to help you with, because unfortunately 2 different departments working at very different speeds. We need the decisions to marry up in some cases, but not all cases.